And family of My Florida Mortgage Solutions. I'm Jose Rivera, your loan originator that you can trust. And today, guess what? Today's Tuesday tips. So I'm so excited that you're joining here with me, that we're going to talk about some pointers, some tips that will allow you to gain the knowledge necessary for you to be successful. Not only to be successful in purchasing the home, also that you be empowered that you will be enjoying that moment of financing your property. Then that way you feel comfortable, you're excited, you can just relax and being able to go to that closing table in a way that you be loving the experience. So always remember, connect every Tuesday for the Tuesday tips at 6 o'clock in the evening, and we'll be giving you this amazing tip. So what is the tip of today? Today we're going to talk about some information. What is the difference between FHA and conventional loans? A lot of people ask me about that. Some of the times when we're engaged with our clients, there's some misinformation, and some people have some fears or some lack of information in regards to that. Some people come very determined to get in a specific type of loan, but the most important thing is to know the difference between the two, because one program is not that it's best than the other. It depends on your financial situation in the moment, your circumstances, anything to do with you. So you have to make the decision, and we will be guiding you so you make the right choice in the right time whenever you're making that decision. So let's start with the difference between FHA and conventional, guys. So let's start with the FHA loan. One of the biggest difference on the FHA loan and conventional is, let's start with the simple principle. What most people are not concerned, they just want to know, what is the difference of the down payment? How much is the down payment between a conventional and an FHA? So when you look at here on an FHA, your down payment, specifically when you're making that primary investment, that it will be your primary home, they allow you to do at 3.5% of the down payment. That means that for every $100,000 that you're borrowing from the bank, you will put as a down payment $3,500. Okay? When you go into a conventional and your primary home, the options are between 3 to 5%. Okay? That we're talking about for your primary home. If you're going to be your primary residence, conventional between 3 and 5%. On FHA will be 3.5%. That's amazing, because in the past it used to be that people are asked to put so much more, 10, 15, 20%. No, when it's your primary residence, you'll be able to do that. So that's the first difference between the two. The second biggest difference between the two is that how much flexible are the loans with your credit and your current situation. So when you look at here on a conventional, minimum FICO score that they're allowing most of the lenders is 640 credit score, or FICO score like other people call it. When you go to an FHA, the minimum score is 580 points on your FICO. So think about that. Imagine if you're renting your home or you're living with relatives and you were thinking, oh my goodness, my credit is not the best. Guess what? On an FHA loan with a 580 beacon score, you're able to do that. On a conventional, you're not able to do that. But the great thing is, instead of being renting or living with relatives, you have the ability to build your legacy, finance a home of your own, and being independent. Then that would be a great way to go, because they're more flexible. One of the things that it's amazing in regards to the flexibility is that when you're in an FHA loan, a little bit different than when you're on a conventional, on an FHA loan allows you that your debt versus your income allows it that you can borrow a little bit more. Some people will be thinking about, well, that doesn't sound like a very good thing, that I can buy more than in a conventional. Actually, it is, because when you think about it, not everybody has all kinds of income. So when your income is X amount of income and you're already making, let's say, $1,500, $1,600 of rent that we're seeing it, then imagine that you can qualify to purchase a home and they're not going to be declining you because of your income. So on an FHA loan allows you for you to be able to do that, for you to be able to buy a little bit more of your debt versus your income. So that's a big one of the key factors between the FHA and a conventional. Now let's talk about one of the biggest difference between FHA and conventional. One of the biggest reasons why sometimes people decide to go one way or another. So we already talked about that if you go in an FHA loan, you can have a little bit lower score. They're a little more flexible. They allow you to buy a little bit more versus your income. But also, when you're in a conventional, you have one advantage, you can say, that it depends how much you accelerate your payoff. So there is a concept or a principle or a fee that the lender charge you whenever you're not putting 20% down. So let's say you have 3 to 5% or 3.5%, and you put that down payment, you're not putting 20% down. That becomes like a little risk in the eyes of the lender, and because of that, they impose a fee that is called a mortgage insurance. So what happens is that if you're in a conventional loan, you're allowed, if you put 20% down, you don't have to pay for that mortgage insurance, number one. Number two, even if you put 3% down or 5% down, as you're accelerating your payoff, when the balance of your house is about 20% less than the value of your property, you're able to remove that from your mortgage payment. So there's one good thing about the mortgage insurance in regards to a conventional loan. You're able to, if you're that kind of person that likes to pay it off quick, then you're able to do that. On an FHA, the mortgage insurance always will be part of your monthly payment. Now, if the moment when you're doing the financing, if you put 10% down on an FHA loan and you went on and that type of loan, at that particular moment when you reach, you can wait until the 11th year and they will be able to remove that mortgage insurance. So that's kind of like the difference between the two. So keep in mind. Now, let's think about that. Some people say, well, let's do this then. If that's the case, it sounds to me like the conventional loan is much better. So what I'm going to do is I'm going to take 2 years, 3 years to better my credit. And when I go over 640, I want to put my 3 to 5% down, go on a conventional. And then when I accelerate my payoff, then I'm going to be able to remove that mortgage insurance. Yes, what you're thinking makes sense. But the beautiful thing about the mortgage industry and the beautiful thing about living in the United States of America is that you're living in a financial freedom where you can make changes down the road. So what it means, if you're renting now, why are you going to wait 3 years from now until your credit gets better? 3 years from now, the property that you can buy today for $200,000 is going to cost you $240,000, $250,000 potentially, if the economy continues to go the same way that we're going right now. What happens with that? You're losing your momentum. So what I see a lot of clients that do, if in the moment what they qualify, what the best for them is to do an FHA loan, they go into an FHA loan, they secure that price of the property, they accelerate the payoff, and whenever they get to the 20%, probably down the road in 2 to 3 years, their credit got better, and guess what? They're gonna owe so much less in the house, and they refinance it to convert it into a conventional loan. And now this is what you call it a win-win situation. So keep in mind that tip. Never delay the fact of you purchasing a home because you want to better your credit. It's going to take 2 years for then you to engage yourself in a conventional. Go into an FHA. You could do that, and then down the road you're able to refinance it and convert it into that conventional and eliminate that mortgage insurance. Now, let's talk a little bit about a little bit of the difference as well as far as interest rate. Now, keep in mind that I mentioned that on an FHA loan, in regards to the mortgage insurance, the lender always will keep, if you put the minimum down, they're always going to keep that mortgage insurance. Because they're making that money for all that time, they're hoping that for 30 years, but they don't know that I just gave you that tip that you can refinance it. But because they know that, or they're thinking that that's going to happen, typically financing charges on an FHA loan is normally a little bit lower. So you can secure a little bit lower over APR or financing charges versus the conventional is slightly higher. Okay, so that's one thing to know. Now, what happens if I file bankruptcy? What happens if you file bankruptcy or if you're in a foreclosure in the past? What is the rule between one or the other? If you're on a conventional loan, if you file a Chapter 7, you will have to wait 4 years for you to be able to engage yourself in financing that home after you file bankruptcy. If you're in a foreclosure, you will have to wait 7 years after they process it with the judge and everything like that, okay? Now, on an FHA, on the same bankruptcy, instead of having to wait for 4 years, you can wait 2 years after you can engage yourself on that loan. For foreclosure, you can wait not 7 years, for 3 years. So let's think about that once again on that tip. Do not delay the fact of you being able to finance your home and get out of the rent. You can actually go into an FHA, and then when the 4th year, you're already in the 4th year of the 7 years, you could just refinance it for a conventional and remove all the mortgage insurance and all those things. So guys, keep that in mind. This is tips that is going to help you for you to feel confident to make that decision of financing a home, but also is going to allow it for you to do it now. You don't need to wait 2-3 years. You don't need to wait anymore. Do not keep throwing money into the floor and the garbage by doing a lease. Do not do that anymore. Call us. Make this appointment right now and call us at 321-424-6088. 321-424-6088. Give us a call. Make that appointment and we'll be part of your journey. Thank you and have a great evening. Bye-bye.